Hello and welcome back to our Mastering Adjustments workshop. This is part of the basic accounting workshop that we are doing for you. So today we'll be tackling prepayments. So by the way, my name is Lisa. I'm a CPA, a QuickBooks Pro Advisor, Zero Advisor Certified, and business owner. So, welcome to today's training session. So, as we have said, we are going to take a look at prepayments now. We are going to define it, why make adjustments for prepayments, when and how to prepare adjustments using the two methods of accounting for prepayments, and its effects of adjustments to the financial statements. We are going to do this by using a demo account, a demo company. So, what are prepayments? So, these are expenses which are fully paid, but the full benefits or services is yet to be received in the accounting period. So, an example of this is if you have paid a 1 year subscription for your accounting software. So, for example, you paid the full amount uh, in the month of January. So, in January, you are going to record the payment of the full amount, but during each month, you are going to record the expense for each month. So, for example, the amount of the software use or the subscription is 240. So that would be divided by 12 months. So you are going to expense 20 each month. So that is how prepayment works. So why make adjusting entries for prepayments? So the first two reasons are for the general adjusting entries to closely align the reported results and financial position of a business with the requirements of an accounting framework such as GAAP or IFRS, to use adjusting entries to produce more accurate financial statements. And specifically for prepayments, we have to account for the two portions of the prepayments, the expense portion and the asset or unexpired portion of the prepayment. So when to make adjusting entries? So usually adjusting entries are created at the end of a reporting period. So for example, in our example, we have uh, the subscription, the accounting software subscription. So we are going to expense the expense portion each month. And for the other adjusting entries, you can make it quarterly or yearly. Example is the depreciation of your fixed assets. You can do it annually. So as we have said, there are two types of accounting for prepayments, the asset method and the expense method. So what's the difference? So the asset method is uh, when in the initial recording of the prepayment, we use the asset method. So in other words, uh, once we paid the expense, for example, we paid for the subscription, we debited an asset account. So let's say we paid for we paid for the subscription, the accounting subscription. So we debited Prepaid accounting subscription in the amount of 240 and credited cash 240. Under the expense method, we will debit the entire amount into an expense. So we debited subscription expense and credited cash. So that is the difference. So when adjusting the prepayments, we have to take a look if the company is using the asset method or the expense method. Okay, so let's go ahead and do our uh, demonstration using our sample company. Okay, so let us now prepare our uh, example for the prepayments using the asset method of accounting. So remember that under the asset method of accounting for prepayments, the initial recording of the payment is by using an asset account. So for example, we have Lily here. Lily is moving from manual accounting to cloud accounting software for her business using a software on a subscription basis. Subscription. So the monthly subscription is $35 and Lily paid a 1-year subscription last August 2023. So let's say that we are accounting for as at the end of December. So let's take this out. So remember that we are accounting for December 2023. December 2023. December 31, 2023. Please bear this in mind as we go along with our example. So on August 31, what's the entry? What's the journal entry when Lily paid the cloud accounting software subscription for a 1-year subscription? So on August 31, the entry is she will debit an asset account, which is prepaid accounting software. Subscription. So remember, this is an asset account. And credit. So let's say she paid in cash. So that would be how much? $35 times 12. 35 times 12. That would be 420. So we know that from August 31, 2023 up to December, it's not 1 year. It's only September, October, November, and December. That's only 4 months have passed. So at the end of, on December 31, what is our adjustment? So our adjustment is to get the expense portion of the prepaid accounting software subscription. So how much would that be? So let's put the computation down here. So that would be 420 divided by 12. times how many months? Times September, October, November, December. So times 4 months, so that would be 140. Okay. So we are going to debit the expense account, which is the accounting subscription, in the amount of 140, and credit prepaid accounting software in the amount of 140. So let me put that here. That would be 35 times January, February, March, April. No, September, October, November, December. So that would be 4 months equals 140. Okay, so if we are going to plot that in a T account, okay, so let's plot this in a T account. Remember that this one is the asset account. And this one is the expense account. In the asset account, okay, so let's plot this one. So we debited the asset account in the amount of 420 and credited cash in the amount of 420. So at the end, on December 31, 2023, we are required to adjust the amount of the asset account and the expense portion of the subscription. So we are going to debit the expense, the total amount of 140, and credit the subscription accounting software asset account in the amount of 140. So on December 30, the balance of the asset account is equal to 280. This is the asset portion of your accounting software subscription. And this one, the 140 will, this 280 will go to your balance sheet, to the current asset portion of your of the balance sheet. And the 140 accounting subscription expense will go to your income statement under the expense accounts. So now let's go ahead and prepare the expense method of accounting for this kind of prepayment. That would be expense method. Okay, so let's copy this one. Okay. So as you can remember, under the expense method, upon payment of the subscription, the 1-year subscription, Lily charge everything to an expense. So we are on August 31, the entry is debit accounting software expense, subscription expense, and credit cash of, how much is that? 420. So on December 31, our question is, how much is the expense portion of the accounting software subscription expense, and how much is the asset or the unused portion? So we have already accounted or computed the expense portion, which is 140. So we are going to debit an asset account in order to get the expense portion, to reduce the expense account of 420 to 140. So that would be and credit the accounting software expense. So how much would that be? So that would be 420 minus the amount of expense, which is 140, right? 420 minus 140. So the amount of prepaid or the asset portion is 280. So let's go ahead and plot this to the T account so we can see. So at the beginning of, at the time the subscription was contracted or was paid, we debited the expense account for a total amount of 420 and credited cash of 420. And on December 31, we made an adjusting entry, this one. We debited the prepaid accounting software account in the amount of 280 and credited the subscription expense in the amount of 280. So at the end of the accounting period, the expense portion is equal to 140. And on the balance sheet, the prepaid accounting software will show 280. Okay. So that is how you account for the expense method. So when you are using the expense method at the beginning of the next accounting period, on January 1, 2024, we are going to reverse this one the prepaid accounting software account and put the account back to the expense method of accounting for the prepayment. So we will debit accounting software in the amount of 280. Is it 280? And credit accounting and credit the prepaid account of 280. So remember that this expense account will be close to the income summary account. So that's why this will be closed. This will be 0. And in order to reverse this prepaid accounting software and return this to the expense method of accounting, we are going to reverse it and debit it to the accounting software subscription expense. And then you'll start again to prepare to get the expense portion of that 280 at the end of the accounting period. So that is how we account for the expense method and asset method of accounting for prepayments.